Welcome everyone to our webinar on catalyzing the adoptions of digital payments, with particularly a focus on Zambia, Nigeria and Kenya today. I'm really excited to have you here with us. My name is Sarah Corley. I'm CEO of the Alliance of Digital Finance Associations. I'm also joined by a wonderful panel today who've got great expertise, which they'll be sharing with us today. We have Jacqueline Juma, who's the Director, Advocacy and Capacity Development at Africanenda. We have Reese Sengani Piri, Executive Member, Technology and Innovation at the Association of Digital Finance Practitioners in Zambia. We have Abubakar Shehu, President of the Lagos chapter of the Association of Digital Finance Practitioners Nigeria, and Abigail Komu, Vice Chair of Digital Financial Practitioners of Kenya. And I'm going to say particular thanks to Abigail, who stepped in at the last minute, as unfortunately Victor advertised on the webinar couldn't join us. So thank you, Abigail, for coming in at such short notice. We really appreciate you. I'm really delighted that the Alliance DFA and 3 of its members, so we've got our members in Kenya, Nigeria and Zambia, are collaborating together with Africanenda to dig deeper into payments in their particular countries. In preparing for this webinar, I've been really surprised by some of the similarities and some of the differences, and I'm really excited that you'll all get a chance to share in these conversations today too. What we would like to ask is a couple of housekeeping things. Towards the end of today's webinar, we will have time for discussions, and we really want to hear your questions. So attendees, please pop your questions in the Q&A function, and we'll get round to asking and answering as many of them as we possibly can do during the live webinar. And also we will be sharing the recording of today's session. So if you do have poor internet connectivity, or alternatively you really enjoy the webinar and want to share it with somebody else, you'll be sent a Zoom link, a YouTube link to be able to do that within the next couple of days. So first, let's get started. We're firstly going to go over to Jacqueline, who's going to give us a brief synthesis of the consumer insights found through Africanenda's research and State of Instant and Inclusive Repayments report. So Jacqueline, over to you to set the scene for us.
If you can see my screen.
We can, Jacqueline.
Can you see my screen?
Yes.
Okay, thank you. Hello, everybody. Welcome to this session. I'll very quickly just take you through the insights from the SIIPS, which is the State of Instant and Inclusive Payment Systems in Africa 2022 report, and particularly looking at a cross-country synthesis of the consumer research insights.
Jacqueline, do you just want to pop it into the presentation mode? We can see the PowerPoint itself rather than the presentation.
Okay.
There we go. Perfect.
Okay. Okay, so I'll start by very quickly just walking us through the research approach and methodology. The objective of the consumer research was to draw insights to inform how instant payment systems can be designed to better meet the needs of end users in Kenya, DRC, Egypt, Ghana, Nigeria, Tanzania, and Zambia. We looked at understanding, the research was focusing on understanding key consumer behavior trends and particularly identifying the users of digital payments, understanding which payment methods are used and for which purposes, and also understanding the barriers and key opportunities by looking at reasons and decisions behind the usage of digital payments, as well as challenges experienced in accessing digital payments and opportunities for adoption. For the various country focus consumer insights, the sample sizes, as you can see, they're not nationally representative, as this exercise was intended to draw out insights to inform how IPSs might be designed in a better way to meet the needs of users. So I'd encourage all of you to go to the Africanenda website to read details of the report and particularly have a feel of what the consumers are saying. In assessing the payments instruments and trying to just gauge how these payments, the instruments or the solutions are addressing the pain points, we see 3 clusters emerging and they are presented by the breadth and depth of usage of digital payments. We have the leading, emerging, and nascent clusters. In the leading cluster, we have countries like Kenya and Ghana that show significant breadth and depth of usage. In the emerging clusters, we notice less uptake of digital payments, but Nigeria stands out in terms of a depth of usage that is comparable to the leading clusters. In the nascent cluster, we have countries like Egypt and the DRC, which show low uptake and level of usage. Mobile money is widely used by both individuals and MSMEs in these countries. In terms of mobile money usage, mobile-based payment instruments are widespread in these countries, except Nigeria in the emerging cluster, which has a significant share of digital payments happening as card-based transactions and bank account-to-account transfers. In terms of the regularity of digital payments, despite there being mostly high breadth in most clusters, as you can see, there's a common thread of low depth of usage in the emerging and nascent clusters, which indicates that digital payment instruments are not yet as diffuse and as penetrative in the day-to-day activities of the consumers. It is important to note that all sampled countries have an active IPS. That is the countries that we selected for this research, which helps facilitate payment methods such as mobile money.
Apologies, everyone. I think we may have lost Jacqueline due to technical difficulties. We'll just give her a minute or so. Hopefully she'll be able to rejoin.
For daily transport, merchant payments, among others. These are common themes that cut across the country clusters where respondents identify them as among the top 5 needs. It's also interesting to note that the top opportunity identified is payment of public transport, considering the potential of this industry in Africa. A few countries are tapping into this opportunity. However, there's a need to identify the value chains involved for at least what we have seen and establish incentives for digital payments, because from what we see so far, it's not just about digitalization. The value proposition needs to override existing alternatives. And what is the existing alternative? It's just cash. We also sought to understand what are some of the perceptions, what are some of the reasons behind what we have seen in the previous slides. And we narrowed down to 3 countries, that is Kenya, Zambia, and Nigeria for purposes of this presentation, to just hear about typical personas, for instance, those individuals that are using digital payments, as well as those small business owners. What do they have to say? So for instance, in Kenya, we have Jessica, who uses digital payments for her individual needs. Her main concerns are challenges experienced when conducting cross-provider payments, where beneficiary details are often not confirmed. And she also talks about facing network connectivity issues as her core challenges. However, what keeps her going is the convenience that is derived from the use of digital payments, because she feels the solutions that she uses are relatively affordable compared to the cash alternatives at her disposal. So she's not saying that the charges are not expensive. She's saying compared to what she would have used, for example, in transferring funds, she's comparing digital payments platforms against sending someone or other risky options. She prefers this just because it makes sense to her in terms of the convenience and in balancing the risk that might incur. Ali Basai in Nigeria, who is a small business owner, is driven by the ability to trace her transactions, which enables easier business reconciliations. She can authenticate the beneficiary of funds, for instance, and enjoys the benefits of instant transactions. However, she complains about the prevalence of fraud through phishing attempts and expresses that sometimes fraudsters even purport to be her suppliers. So in balancing out whether she should, or in making decisions as to whether she should conduct digitally, yes, there are those benefits, but increasingly she gets concerned when it comes to sometimes hearing about the prevalent communication that is happening within the market when it comes to fraud, or in some instances, she experiences phishing attempts. Naftali in Zambia is also a small business owner and operates a mobile money agent premises. He's driven by the commissions he earns as an agent from the mobile money agent business. He's also driven by the advantages of instant payments and the simplicity of using digital payments. His challenges involve delayed transactions where notifications sometimes are not received, even though the actual credits or debited have been effected, as well as network instability and what he refers to as hanging transactions. So just, a pending transaction that has not been concluded. So what we are seeing when we look at the lives of these typical personas is that for the leading clusters, where we have countries such as Kenya and Ghana, access to additional value proposition beyond the store of value, such as credit, insurance, and other solutions that are just providing proximity to other solutions within other sectors, are important driving factors for the constant usage of digital payments in this cluster. Widespread network infrastructure and coverage facilitate the usage. However, there are some concerns, evolutionary concerns. For instance, when governments begin to introduce things like e-levies, for instance, like in Ghana, we see a lot of challenges in that constant usage. Yes, there might be usage, there might be penetration in terms of account holdership, but there's a letdown, or there's a lag in the way people perceive these instruments and channels to be useful vis-a-vis cash or vis-a-vis other alternatives. In terms of the emerging cluster, that is Tanzania, Zambia, and Nigeria in this case, indicators show that digital payment usage is on the rise. However, barriers as limited education, awareness, and poor network dependability slow down adoption. So the issue is they understand that the network downtimes don't happen all the time. They understand that the network downtimes only happen at certain times, but the perceptions around whether this network is whether I should rely on this network to deliver in this transaction, there are challenges, and that's why they are referring to the issue here being the dependability of the concerned network. So, but we're also seeing in these countries, in the emerging cluster, that is a bit of progressive policy reforms. I believe we have a representative from Zambia who is going to showcase some of these positives. We also have the rising e-commerce across these countries and the growing favorable perceptions of banks and driving factors of adoption in these markets. We're also seeing user-friendly products that are also driving the usage, particularly in Nigeria, driven by a very vibrant fintech ecosystem. In the nascent cluster, in the likes of Egypt and DRC, digital payment usage remains low in these countries, despite improving network coverage and the increasing availability of product varieties in the DRC and Egypt. There are some challenges, though, that bog down usage, and this include lack of trust in some financial institutions in DRC and predilections of cash from cultural influences in certain countries like in Egypt. Some barriers, we also see specific barriers that affect women. Women face barriers to access due to deficient documentation and lack of device ownership in some markets, especially in the nascent cluster, and other issues that these women raise to do with fraud, exploitation, and other cultural barriers. So what are the implications after all is said and done for payment scheme design? So the key imperatives for IPS scheme design, having understood these perspectives from the customer, having understood how these payment instruments are supporting the usage of digital financial services, there are a number of things that are crucial to IPS schemes as the market evolves. These are, for instance, the availability of a use case and channel that consumers want, not boardroom ones, because again, it's easier to just copy paste solutions, but the challenge, a challenge arises when it comes to traction. So it means that customers do not resonate with whatever is in the offer, and they default back to cash. So it becomes a vicious cycle, and we can keep talking about this for a very long time. The other thing is the importance of trusted providers or payment services as participants of an IIPS scheme. Providers that are licensed, providers that are known to not exploit customers, and so on. The importance of developing payment systems that are truly instant, because in some instances we say instant payments, but instant becomes 24 hours, instant becomes T+1, and we default back to not keeping to the promise. The other thing is the need to also consider the speed of transaction reversals in IIPS design, or to consider how best to use technology to reduce or eliminate the chances of consumer making errors when paying, making use of digital payments. And yes, there's a lot of thinking in the way instant payment systems can be instant, but when it comes to reversals, other challenges around the irrevocability concepts, we lag behind in ensuring that these reversals are speedy. Again, considering that the sensitivity of some of these transactions at the bottom of the pyramid, it becomes a challenge to keep to digital payments. The need to protect data, personal data, and to strictly regulate agent handling or any other third parties that are handling personal data, and even their behavior towards customers is also a key concern or an implication when it comes to the design of this instant payment schemes. The importance of affordability has also been emphasized compared to alternative solutions or compared to cash to drive the use of digital payments. And lastly, the need for risk-based KYC as part of the IPS to overcome documentation barriers. On the part of the scheme participants, when you zero in some of what, and you try to zero in on some of the insights and what it means at the participant level, scheme participants have the following considerations: the need for a broad agent network and reliable network infrastructure is seen as a foundation for facilitating access. The need for accessible and responsive customer service through robust customer recourse mechanisms. The need for transparent and simple pricing structures that acknowledge the consumer's best decisions. The need for targeted communications that pick up on consumer security concerns with regard to cash, because again, if you're not leveraging the disadvantages or the weaknesses of cash in your communication, you can get lost in the value proposition, because many times we are caught, or it's sometimes even just easier to communicate about how the digital store of value is better than the mattress, as we all have had. But beyond the store value, unless we talk about the value proposition over and above the digitalization of that store value, then we might not be resonating with the existing pain points of users out there. The need for usability and simplicity as key product design features and for targeted user education, leveraging these principles. There's also the need for scheme participants to develop and offer value propositions beyond payment functionality. So how can we tie other use cases that are not related to payments, such that the products have a wider I mean, customers can pay attention to a wider array of usable features of these products. And then lastly, in some instances, they need to take care of context-specific cultural norms into account, particularly as raised in some of the nascent countries, as you've heard about how there's a lot of cultural interferences in certain segments like the women's segment. Thank you. I'd encourage you again to visit the Africanenda website for more insights. I'll give it back to you, Sarah. Thank you.
Wonderful. Thank you so much there, Jacqueline. That was a lot of information in a very small space of time. We really appreciate you giving us that great background. And for everybody on the call, you will also see I've popped the link to the Africanenda website where you can download those country-based specific reports, and also obviously any of the annual reports that have been done as well by Africanenda. And I think it's really interesting that you mentioned kind of cultural context, because actually that's why we have different experts from different countries on the call with us, because they are the ones who often know, well, the context and what's going on within their countries keenly, as that's the ecosystem that they operate in on a day-to-day basis. So I'm going to loop in our panel and ask them briefly to start us off, to kickstart the conversation. What surprised you most from your country's synthesis? So Abigail, I'm going to start alphabetically with you and go to Kenya.
Thanks, Sarah, and thank you, Jackie, for an insightful presentation. So for me, what was most, would say, shocking is that while we do have high wallet accounts, ownership, would say that, we still have a prevalent use of cash, and the agent network essentially is also quite busy. So we have a lot of cash in and cash out. So whereas there are accounts, we still have many people still using cash and withdrawing and depositing through the different agent networks.
Great. Well, not great, but great for the insight. Maybe let's go, Shehu, to you next. What was your biggest surprise reading the Nigeria report?
Well, for me, reading the Nigeria report, the biggest surprise for me is the high rate of adoption of the USSD as a means of digital transfers and payments. But that's what comes as a big surprise for me. I mean, huge adoption, very huge adoption of USSD.
Perfect. Gets us going for the Nigeria context. And last but not least, Reese, what about Zambia? What was your biggest surprise?
Yeah, for Zambia, the interesting part was actually to see that cash is still king. So cash is still king in Zambia. It was so surprising to actually see the levels of cash dominance from the angle of the individuals as well as the MSMEs. It's all above 90%. So cash is still king.
I think, it's a good reminder for us to remember that just because someone owns an account or an e-wallet doesn't mean that they actually frequently and regularly use it and make the most of it. As we can see from all of your insights there, cash is still quite prevalent, but interesting to hear, that actually the adoption of USSD has been really successful and interesting in Nigeria. So I'm going to go across to Nigeria first. Shehu, maybe you can sort of, given your context in Nigeria, what do you see as the key challenges and also some of the opportunities or recommendations to drive more digital payments in Nigeria?
I didn't get you because you broke off, but if I sense what you said is around what are the key issues around USSD in Nigeria, for me, I think, okay, I'll say 3-4 main issues with USSD in Nigeria. The first one is the issue around the disagreement around payment for USSD between the banks and the telcos. That is the first one, where the banks threaten to maybe cut off service to customers. That is one key issue for me. Fortunately, the CBN has, and the regulator, NCC, telco regulator, have come in to find some resolution to this. The second issue for me is, key issue is the Central Bank of Nigeria framework on USSD. I think that framework, one, is dated, two, overly focuses on payment. And I think we saw it in Jacqueline's report, where the proposition around catalyzing digital transactions shouldn't just be basically around payment. It should go into savings, it should go into loans, it should go into even other services, microinsurance and pension. So I think the CBN framework on USSD overly focuses on payment. That's second issue for me. The third issue on USSD for me, key issue, is basically also around the fact that the current dispute between the banks and telcos, even though it has been resolved by CBN and the telco and the NCC coming together to see that it's resolved, I think there's an opportunity for a more sustainable resolution, a lasting resolution. Key for me again in this is that the USSD issue for me offers a lot of opportunity for Nigerians. Sarah, permit me to deviate a little in saying that there's a current AFCA, Africa Continental Free Trade Agreement, that is in place, and there is a Pan-African payment system in place that I think will be layered on that agreement. If we find a way to synthesize USSD upon this Pan-African payment system, whereby somebody in Nigeria can make a direct payment to somebody in Kenya, and somebody in Kenya can make a direct payment to somebody in Zambia, I think it will go a long way in catalyzing digital payments in Africa. Currently, that is not the case. Currently, there is a framework around Pan-African payment settlement system. I think it's a replacement of the SWIFT system. But if we can synthesize this with USSD, for which there is a huge adoption in Nigeria, and I see reasonable adoption in other countries like Ghana, like Kenya, like Zambia, like even Egypt, that is just emerging. I think it will go a long way to synthesize USSD on the Pan-African payment system so that Africans can transact freely with Africans, especially in this emerging digital era. These are the key considerations for me. Thank you.
Thank you so much, Shehu. I mean, I think you raised some really interesting points there around the prevalence and high adoption usage of USSD, which probably has some sort of reflection on the type of device that people are using. You know, we often maybe make an error that people have smartphones when perhaps they don't, or access to data being, you know, sort of not always feasible, whereas USSD can be a much more affordable and sort of option for many Nigerians in particular. But I think you've also raised a good point about we can't just, you know, just focus on in-country payments. We also have to think about, you know, Pan-Africa as well, because it's we don't live in a world where we only pay people and interact and transact with people within our own countries. Of course, we have 5 different countries represented just on this Zoom call today, and our participants also from many other different countries across the world who we all need to pay each other. Just one more question quickly for you, Shehu. What about transport payments? What do you see that as a driver in Nigeria?
I think transport is an opportunity for me in Nigeria. Absolutely, because the transport system in Nigeria is broken. Permit me to say that, broken, because it's highly private driven and it's basically cash based. And transportation is huge. It's an everyday activity for every Nigerian. And because it is broken, it is basically a cash-based, if you ask me, transaction where there is no way to transact digitally with the transporters. And again, if you look at the fact that transport is an everyday thing for millions of Nigerians, then that is a huge opportunity. If you also consider the fact that the transport value constellation, I don't want to look at it as just ecosystem. Ecosystem is huge, but if you look at transport value constellation, you will see that there is a huge opportunity for catalyzing digital transaction. What do I mean by value constellation? There is the mechanic, there is the insurance man, there is the driver, there is the conductor, there is the car wash, there is the park, there are just so many people involved in the transport system, so many, huge. If we can find a way of digitizing this so that it doesn't have to be cash, we'll be taking a huge opportunity towards taking digital transaction from digital payment from one level to the next. So in Nigeria, the transport system is broken, and it's a huge opportunity to catalyze digital payments. We saw that hint during the times of cash scarcity in Nigeria. I think that should be February, March, just before the elections, during the currency change. The transporters accepted digital payments. And that shows it is possible. In some cases, because the old notes were declared not acceptable, the new notes were not available, so transporters were ready to take digital transfers, digital payments. So it is actually possible if the if the transport system can be digitized to serve as a way of really taking our digital payments to the next level, catalyzing digital payments here. Thank you. And finally, maybe I'll leave it there. I wanted to talk about other opportunities that we are not taking in Nigeria. And maybe the transport system for now cannot really be digitized because we don't have what other countries are doing. Currently, we don't have a digital deck in Nigeria, a digital stack in Nigeria. Countries like India have tried digital stack, and India has what they call the Digital India Initiative that aims at delivering digital experience to Indians in most areas of everyday activity, starting from digital identity to digital lockers to even what they're trying now, they call the open network digital commerce, where the petty trader, the motorist, the artisan can bring their trade and their businesses onto a super app. So they are all of them are on a digital platform. Whether you are a cobbler, whether you are an artisan, whether you are a petty trader, you are on a platform, a super app, and you could transact digitally and get paid digitally. I think that's what Nigeria is missing, and that's why it's difficult to digitize all these systems like the transport system. So we need a digital stack in Nigeria. For now, we don't have it. And unless we have it, we can't take this opportunity. We need to have it to catalyze digital payments from the inside.
Thank you so much, Shehu. There's some really fantastic insights there. You know, I like how you talk about digital transport being an opportunity, because it links to what I remember. I made a note, Jacqueline, when you were presenting, but how do we make digital payments part of our day-to-day lives? And as you said, you know, every day we're often, you know, sort of getting on some sort of form of transport to get from place A to place B. So that is a way of digitizing, of catalyzing adoption and becoming, you know, part of our day-to-day lives. But as you mentioned, also that infrastructure, things I can see in the chat as well, we've had conversations about digital identity also is another one that crops up. And so I know that's something that Reese and I talked about when it comes to Zambia. So I'm going to come over to Reese because I think you can maybe sort of give your insights, and I think they nicely connect into that.
Thank you very much, Sarah. That was an exciting insight on Nigeria. For Zambia, with the research respondents, it was very exciting to see that cash is still king. And beyond this, the challenges that are actually on the ground are all around fraud, scams, issues of poor customer service, and reversible transactions, like Jacqueline earlier stated. All these are actually ending up causing skepticism on the side of customers, and all that now has taken over. So we see skepticism taking over product knowledge. So instead of people being informed of how the product works, they are skeptical of how to embrace this new service. Then apart from that, the other challenges that we managed to actually see from this research is that there are certain solutions that have been developed but are not responsive to the users. So unresponsive solutions developed, but not for the targeted customer that you're actually giving it to. So what was identified was actually that USSD is quite all right, cheap, affordable, easy to use, but the products that have been developed on USSD have not been marketed and informed. Customers have not been informed about them, even after they've been developed. And so there's also this rush to say there's new technology on the market and there's smartphones and everyone is rushing to use the smartphone, and most of the apps are being developed on smartphones, and we're leaving out the people that are actually still unable to purchase the smartphone, people that are supposed to use the feature phones that ride on USSD. And so we are skipping them by going ahead and leaving them behind. Apart from this, there's also the challenge of the network, as well as the payment platform, also the uptime of the payment platform, as well as the connectivity challenges there. As Jacqueline stated, to say you end up now having the hanging transactions in there, and then now it becomes a challenge when it comes to the issues of recourse mechanism. When the customers complain, how are solutions provided? So the problem again that is actually there, that is actually hampering the adoption of digital payments that was identified in this research, is that the recourse mechanisms that are there in place are not really helping enough. Actually, people end up feeling like, what is the purpose of me getting this service if I'm not going to work with them on, and they're not going to lead me to other services that will be beneficial to me? So these are some of the challenges that have been identified, like for Zambia. Another thing is the issue to do with the limited payment use cases. We've seen to say for Zambia, it's mostly a payment for airtime. Apart from payment of airtime, transport, most of the people use cash. Household goods buying, yes, they will use a bit. And also we've seen a pattern to say certain merchants actually don't accept the digital currency, the mobile money currency. And then on the other hand, again, the other challenge which is there is that for Zambia, this was actually a big problem, and it still is there. In certain instances, you will find that a transaction will be categorized differently, where it's supposed to be a P2P, instead of it being a P2B, like a merchant person buying from merchant, it is taken as P2P. They use the P2P channel, and because they are sending it under person to person, like peer to peer, it is accruing a charge, and then the person receiving the money demands for a withdrawal amount. So at the time of sending, they make the transaction become expensive because they demand for withdrawal charge. They say, yes, no problem, you can buy this thing from me, but you're buying it at this price, but include the withdrawal charge. Why? Because we are not using the correct transaction type. If we had to use the correct transaction class, which is supposed to be person to business, I think it makes it easy for the mobile network operators categorize those transactions and find ways of actually even incentivize. Another issue that has been identified is the poor customer education on product. Very little product knowledge. Apart from very little product knowledge, there's also very poor digital and financial literacy levels. And it is because of that that there is this inertia in the uptake of digital financial services. The last thing that I also identified was digital identity. Identity is very, 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 very crucial when it comes to digital payments. And so from this research, it was very clear to say Zambia is still having challenges to do with identity. And so when you are not identified, it's difficult for you to be included in the ecosystem of digital payments. These are some of the challenges. But beyond these challenges, if you may allow me, Sarah, to go for the recommendations. Okay, so for the recommendations to these challenges that I have highlighted, like for Zambia, for starters, allow me first of all to make mention to say I would like to take this privilege to acknowledge the efforts that have been made by Bank of Zambia, by ZICTA. I say this in the vein of them trying to promote digital payments. On the 20th of September 2020, Bank of Zambia actually had to remove transaction fees for amounts of transfer below 150 kwacha. And then come to the 1st of March 2021, they reinstated, but after reinstating still, they never reinstated the whole lot of the transaction fee, but this time they reinstated less 30%, which was a very encouraging move, both for the business houses as well as the customers. And this has actually been received very, very well. And from the research, when we look at it, we actually see the impact of this to say transaction cost is not actually one of the major barriers when it comes to Zambia. But I would also like to make mention of the actions of ZICTA. That is on the 7th of March 2022, when they actually had to decommission. They deactivated 2.1 million SIM cards that were falling short of the compliance that the SIM cards are supposed to have on the payment systems. And so after decommissioning of this, we saw some slowness and inertia. But afterwards, after looking at the 2022 annual payments report from Bank of Zambia, it actually reflected to say the mobile subscribers actually decreased by 13.4%, whilst the active mobile subscribers increased by 14%. On the other hand, the volumes of mobile transactions this time actually even shot up by 74.6%. The volumes, those are the values, whilst the volumes went up by 89.6%. We can actually see from the influence of government to say they can actually impact the payment ecosystem. But away from this, let me get back now to the findings and the recommendations. So from this, I'm able to actually list out a few recommendations, such as incentivizing of the use of digital payments, not only because right now the incentivizing of the digital payments is for only the mobile wallet users. But the recommendation is for the incentivizing to go beyond mobile users, but also incentivize the agents as well as the merchants in the ecosystem. Thereby, we'll be stirring up everyone who gets active to at least be involved in the payment business ecosystem. Apart from that, I think there has to be more use cases adopted, as we have seen to say there's actually opportunity from the transport sector. We've seen benevolent contribution. So products around benevolent contributions are actually highlighting to say there's an opportunity actually for products to be designed around there, as well as the payment of household goods. Another one recommendation.
I'm going to have to stop you a little bit because we also need to get to Abigail in Kenya. So maybe if you can use the chat function, keep the conversation going. But I also want to make sure that we don't miss out Kenya. I knew I was going to have trouble keeping us to the time because there's so much we could say. So
no. There's more I'll pitch in, but thank you very much. Let me leave this for Kenya for now. Thank you very much.
Thank you so much, Reese. Abigail, let's hear from you because you were so Kenya was in sort of the sort of more advanced usage of digital payments, adoption of digital payments. What are your kind of key thoughts and recommendations?
Thanks, Sarah. And I'll borrow. We had a similar conversation about 2 months ago. It's called Kenya the Unfinished Journey, in collaboration with African Lender. Together with the Digital Finance Practitioners Association of Kenya, DFPAK. So there are a number of things we talked about, and I was just listening to Reese and Shehu and saying, I think the markets are similar because we still have a significant amount of transactions that still happen in cash. However, what we talked about largely was from the, I would say, government, from the supply side. And so the first thing we looked at was around collaboration for the financial services providers. So for instance, in Kenya, you find we have quite a number of financial services providers. So we have about 33 payment service providers. We have 42 banks. We have quite a number of microfinance institutions, SACCOs, etc. And each of them have a digital, I would say, financial service competing for the same customer. Competition is good, and I think that works, and it drives a lot of innovation. However, we find that there are some areas that they can still collaborate. So one is on issues of policy, and I'll just touch on a few. Recently, we've seen the government taxing digital financial services, I think because you can see that the velocity is there. It's a good way to earn tax. However, what this does is it makes the transaction costs very high, and you find, and I think if we link it back to what we found what Jackie was talking about, so where you're finding people either cashing in and cashing out and not basically doing transactions within the ecosystem. So at the end of the day, it could have a negative effect. Whereas, what we want to do is to encourage people to transact digitally. I think the second thing that we can, as financial services providers, collaborate on is the issues of fraud and cybercrime. So we've seen quite a spike of these kinds of incidences, data breaches, and so on. I think many people here know, I think they're called Medusa and Anonymous Sudan and so on. And so what initiatives can be there to curtail the prevalence of such incidences among financial services providers. So it could be sharing information and a number of other interventions. So that is one of the ways that they can collaborate. And then we've also seen financial education and financial literacy. A lot of the transactions we see are still linked to airtime purchase, sending money, and then sending money as a form of transfers. In fact, the central bank did released a study just last month talking about the MSEs, micro small enterprises, And surprisingly, or not surprisingly, 98% of transactions still happen in cash. And the next set of transactions are actually a send money transaction. So you don't have visibility of whether I'm actually sending you money for usage or if it's basically for a payment. And so, yeah, so I think those are the three areas on policy, lowering the cost of taxes and taxes on digital financial services, as well as mobile phones, and then collaborating on financial education, financial literacy, and addressing fraud as well. So the second one is collaboration among regulatory authorities, and we've seen cases where this has worked very well. So an example was, when the financial regulator basically worked with the competition authority, so we could have visibility over the cost of transactions. And so at the end of the day, you know how much it's going to cost you prior to you doing a transaction. So this was not possible, and that kind of collaboration actually made it easier for people to know and understand what their costs are as associated to digital financial services. However, if you know, if you're a fintech and you've worked in this space, although we know the regulator has, the different regulators. We've seen a marked increase in terms of how they are working with fintechs and financial services providers that are looking to digitize. However, there needs to be collaboration among them. So you find that the financial regulator sometimes will defer to the capital markets regulator. The capital markets regulator defers to the financial services regulator. And so sometimes fintechs and entities that want to play in that space are left in a limbo. So more collaboration, I think similar to what Bank of Ghana has done, so where they have one office and all applications go through that, but of course in an effective way. So there's that. And then the last one I would touch on is we need alternatives. So realistically, in as much as we are a very advanced market when it comes to digital financial services, mobile money specifically, one operator has a significant amount of market share. And so, it becomes very difficult to compete. And I'll end with one statement that Stephen Maura, the former National Payment Systems leader at the central bank, said. It's around capacity of the regulator. So working closely with the regulator at every moment, to tell them what is it that you're doing, how is it going to help in financial inclusion efforts, the population, capacity of the financial services providers to invest, and invest in customer education, invest in understanding what customers are looking for, invest in having a proper go-to-market and addressing customer needs. And then the last one is capacity of the customer, which is closely linked to the previous comment that I made. So one more, Sarah. So I always like to end with, there's something that, his name is Michael, he's from the Forgotten Billions, he always says, Kenya is not Nairobi and Nairobi is not Kenya. And sometimes I think when we are building, we build with the cities in mind. However, 75% of the population still lives in the rural areas. And we've heard that there are issues of connectivity, infrastructure, and so on. So always good to look at it from both aspects, with inclusivity in mind, with simplicity and usefulness of the financial services that we are building.
Thank you so much, Abigail. And I knew you guys were going to give me a tough job as a moderator to do today to keep you all to time. But I mean, there's so many issues that we can talk about. And I think, we kind of, and there's lots of fronts that we need to work on. If we could do one thing and one thing only to catalyze digital payments, we probably wouldn't be having this webinar, because it's so sort of multifunctional. We need to look at it from a consumer perspective, from an infrastructure perspective, from a regulatory perspective, from a market kind of financial service provider, payment service provider perspective. There are multi things that we can do. I mean, I'm hearing sort of we have infrastructure issues sort of around digital identity, accessing eKYC. We have issues around network. Abby, as you said, many of our not just in Kenya, but many people in Africa are still living in rural locations with poor connectivity, poor electricity, even in some situations. And so making sure that we're designing products, customer-centric design, seems to be something that maybe we need to think a little bit more about, and also looking at increasing the number of use cases. There were some great conversations going on in the chat there around, sort of being able to pay at restaurants, making sure that insurance also has access, so beyond just thinking about, a payment for a particular item in one particular setting, making it so that you can make digital payments easily every single day in your life, so it becomes the norm. We also know there's issues around fraud, around phishing, digital literacy and trust as well. And, there's a lot that can be done by the regulator. And we've heard some great examples, from Bank of Zambia and Zicta there about some great things that they have done that has helped. But we also know that there was that lovely presentation that Jacqueline gave at the beginning, that sometimes it's not around, things are not particularly affordable, but there's no other option available, or the other options are more risky, so that people do pay the money. So the transaction cost is an issue, but it's also not just an issue, not something we can only just focus on. There are other things as well at play here. So we've got a couple of minutes left. We've nearly reached the end of our webinar, but maybe Jacqueline, you can give us a sort of a couple of examples of things that you feel particularly would help solve some of the issues that we've identified on this call before we begin to wrap up.
Thank you, Sarah. I think, I don't know about examples, but I could just give my my thinking around some of the challenges that have been raised, and some of the opportunities, especially from a policy reforms perspective. On the issue of the USSD, noted, it's an ongoing discussion, has been since 2021, I think. To me, it's not a new or a unique issue that is specific to Nigeria. We've had in the 2 decades, we've had different markets, different partners, banks and telcos clash over different agreements, and it's a question of how industry stakeholders and the FSPs particularly handle the risk sharing and rewarding. The challenges have always been, I think it's good to look back in time and just appreciate what has caused these challenges, and what are the lessons that different markets can learn from each other when it comes to these kinds of agreements. When you look back, some of the key issues that have brought about these complications and conflict has to do with the creation of very simple contracts between the banks and telcos, and contracts that do not take into consideration some evolutionary aspects of the business. For instance, causes of these conflicts have had to do with it being harder for banks and mobile money operators to outsource what they have traditionally what has been traditionally a support function of their own core business. Or in some contexts, it's been difficult to outsource functions that will, lack specific and measurable outputs. Or even sometimes it's not that simple to just say that, I will drive the business, you'll provide the channel. Conflict arises, and what we can learn from some of the lessons, whether it's, across the different countries, is what I believe would help in sorting out issues in markets like Nigeria and others with the same facing the same complexities. And some of these lessons learned, like we've seen work elsewhere, have to do with the clarity of responsibilities. For example, the more carefully expectations and requirements are understood and put down in a commercial agreement, the less likely disputes are to arise later, and the less likely there's going to be gray areas in conflict handling until it comes to this huge designation. The other thing is just looking at how an explicit governance structure, which has, for instance, a steering committee composed of different stakeholders, a cross-functional team within the different organizations, all the organizations involved in coming up with that revenue or risk sharing structure, as well as understanding a win-win proposition, such that this proposition, understanding a win-win proposition that looks at the now and looks at the future, because The space is highly changing. What works now for a telco in terms of just providing a channel might not work tomorrow, given that, increasingly whoever is offering a certain product, whoever is offering a certain payment instrument is bound to change. And given that we are also advocating for risk proportionate licensing, on the part of the regulators. So any sort of business that is coming into the space, most of the regulators and policymakers are no longer looking at who you are, but the focus is now on the function or on the type of offering that you want to present. So again, it goes back to in structuring these agreements with business partners, whether it's for the instruments themselves or whether for the channels, it's important that that win-win proposition in the now and in the later is considered. Building this win-win proposition requires time and a test and learn and open-mindedness in terms of ensuring that you're also capturing how the market evolves. The other aspect that maybe I should also talk about is just to acknowledge that times are changing in terms of what we are seeing with policymakers. It's interesting to note that policymakers and regulator in Zambia is advocating for incentives at a customer level. It's very interesting to also understand that the regulator in that market is advocating for low cost operations, whereby I think it's 10% you mentioned, Reese, 10% of the returns from the trust accounts have to go to the DFS operators to cushion the operators. Yes, 10% have to go to cushion the operators.
Yeah.
I think we keep talking about low cost, bringing back the cost to serve to customers with a bias on not for profit or not for loss engagements at the payment scheme level. But these are some of best practices or benchmarks that we can begin to pick along the lines, some positivity coming into policy reforms and just that constant rethinking of how to engage the customers. I think the other thing is maybe to take that notch higher is I'll also emphasize on what my colleague Abigail said in terms of collaboration and coordination by regulators, whether at a domestic level or at an international level. I think it's very important because it expedites some of the challenges in providing an open and level playing field so that there's more innovation in the space, whether domestically or from the regions. We've seen increasingly regulators coming together to shake hands, creating fintech bridges, for instance, like in the recent case of Nigeria and Egypt. I would like to see more because we have very ambitious continental goals, like Abubakar mentioned, the AFCFTA. It doesn't come easy. It needs a very vibrant digital financial services ecosystem to effect digital transactions when it comes to the digital trend. So I think there's a lot that needs to do, to be done to ensure that, from both a policy and infrastructure perspective, there's a win for both the supply side of the market and the demand side of the market that is speaking to the voice of the customer. Thank you.
I think that's a nice way to end, Jacqueline, thinking of speaking to the voice of the customer. If we want that, there are obviously a lot of things that we can do within the ecosystem. There's policies that we can put in, there's new services and innovations that we can bring. But if they're not speaking to the customer, we are just going to see that inertia that we currently see in digital payments. And so we need to do something different to be able to stimulate both the customers, and we talked about merchants, and up that value chain to really get behind adopting digital payments, making it part of people's everyday lives, and making hopefully then opening doors to other new products or services to bring them into greater financial inclusion, the opportunity for things like insurance, credit, savings, etc., that often can follow on. Digital payments is often the very beginning of that journey. Apologies, we've run over a few minutes and we haven't managed to get around to everyone's questions, but I think we've covered a lot in this conversation today. I can also see from the comments that have come in that this has resonated not just in Zambia, Nigeria, and Kenya, but in other markets, Tanzania, Zimbabwe also. It feels that there are some really similar common challenges and some things that we all could collaboratively do together. So I very much encourage you all, if you need to learn more about payments, Digital Frontiers Institute does wonderful courses on IIPS. The link is in the chat. You can also go across to Africa Nenda's website. They've produced so many wonderful resources and blogs that will help explain and to put things into your own country context. And I encourage you also, if you want to be part of the change and part of this future conversation, join your local digital finance or fintech association. Most countries have them. If you don't know who yours is, you're very welcome to reach out to me. I've popped my email and LinkedIn into the chat. But we have on this call, we just had Zambia, Nigeria, and Kenya, but we have across many countries. And these associations hopefully are going to be a driving force for advocacy and change. And it's been really wonderful to link up the Alliance, our association members and Africa Nenda for this webinar. And we hope it's the start of a conversation and also the start of some action to move things forward, to try and drive those small, incremental needle mark changes that will eventually see digital payments become highly adopted across the continent. Thank you so much, Jacqueline, Reese, Shehu, and Abigail for joining me today. Thank you to all the attendees. I will be sharing the recording with you all soon and look forward to continuing the conversation. Thank you so much, everybody. Have a good evening or afternoon.
Thank you and bye.
Bye-bye, everyone.